When we were talking originally back in 2016, you mentioned that we had a conversation about how important it was to get to 10 properties for you, which was the plan that we had laid out originally,
Right.
to get to those 10 properties quickly, to, in essence, front load your investments in rental properties to get there as quickly as possible. Can you tell people about that conversation and
Sure.
how that formed your strategy and why it makes sense?
Yeah, just to give you a little background, I started working in a small little startup company called Nextel back in 1996. And nobody had ever heard of it. And it was growing very rapidly. So I was making pretty decent money. I was single. I was making good money. I was living like I was in my 20s and my 30s. And I was saving up a lot of money. And what happened was I got married late in life. And when you and I finally sat down, I had been married for a couple of years. I had a very young daughter and I was 47 years old. I had just lost my job at Sprint. They had laid off. I was in Sprint had bought out Nextel and I had lost my job. And I knew at 47 years old, starting a new career was probably not in a lot of people's plans. And so I figured, what could I do to replace the income I had using the assets I had? And so I looked at what we own as far as the real estate I had accumulated over the years, how we could switch that over to future cash generating income. And so when you and I sat down, you said, how much money do you need? And when do you need it by? And so the plan was, I was looking for 5 to 7 years out. I think I had said 10 years at the time with you. And so the plan was, let's get to 10 properties as fast as possible. Then you can work to pay down those mortgages over the next couple of years. That will increase your cash flow. The rents will go up and over the next couple of years. So by the time you're ready to stop working, the majority of those properties will probably be paid off, because at the time, both my wife and I were still working, and it worked out really well. You completely underestimated the income that those properties were. I have to say, unfortunately, you were wrong.
I was.
The properties went up, the rents went up a lot faster than what you had initially anticipated. So thank you for being wrong.
You know what? I'm happy to be wrong on the conservative side and the under-promise side. You know, that's one of our core values here at JWB, is to under-promise and over-deliver. So I will tell you, there was a little bit of intentionality with being wrong, but I wasn't intentionally being that wrong. Your properties have done incredibly well, which we are going to take a look at here in just a few minutes. We're going to see just how these properties have done here. Front loading is one that I talk a lot about and that I've trained my team to talk a lot about with new clients who are coming on board, because it's so powerful. It doesn't matter if you're 25, 55, or 85 getting into your rental property portfolio. The concept of understanding that you want this to be a significant part of your portfolio and then front loading those assets is critical, because if we think about the stock market, it's all about stock price appreciation, right? You don't have these 4 other profit centers. But in rental properties, you still have home price appreciation. You have that home price appreciation, which happens, which when you couple that with leverage is actually better returns in the stock market. Little sidebar there. But what you also have are these 4 other profit centers. And the reason that front loading is so important is because these other profit centers are like a fine wine. They get better with time. Your tax savings improves over time. Your net rental income improves over time because your rents go up, like Michael was talking about. Your principal pay down improves over time. And inflation hedging and inflation profiting improves over time, because we live in an inflationary economic system. And as inflation happens, it gets easier and easier for you to pay your loans down over time. So that's really why front loading makes so much sense. It's because you've got these 4 other profit centers that all do better the longer you're in. So if you're thinking about this and you're saying, well, should I jump into real estate and how much should I jump into it? I would take a long-term view and understand, how much do I really want real estate to be in my overall portfolio? And when you understand that, get there as quickly as possible. And when you get there, you don't have to buy more, right? You can be like Michael. We started out thinking it would be 10, it became 12. But if you just said, I want to get to 10, then you could start to backfill some of these other investment strategies that are important to you. You can put more money in the stock market later on, or what have you, bonds or whatever it may be. But they just don't have that same upside of front loading as rental properties does. Maybe we'll do a show more on that and put some numbers to it later on. Would you agree, Michael?
No, I agree. I think everything you said is exactly what you told me back in 2016. And I felt like I knew it all. And obviously, meeting you, Greg, was a great wealth because of the education. And obviously, having my wife being on my side and kind of telling me, he makes sense. The numbers are right. It's time you give up control. So, giving up control, getting to 10 as fast as possible, taking advantage of that. And I think if you look at long term wealth building, I'd be hard pressed to think there's any other asset class that doesn't build more wealth than real estate. You can make money in the stock market, you can make dividend income, but real estate, like you just said, it gives you all those centers that save you money on taxes and they build wealth and it generates cash flow. If I had all my money in the stock market right now, I would have to sell stocks in order to support my income. And that's a taxable event. And I'm collecting rental income. And because of the depreciation, I'm lowering my taxable income because I'm depreciating 13 properties every year to offset my income.
Yeah, that's a point I haven't really hit on. But if you build your strategy based on this idea of a huge pile of money that you need to retire, and then you're going to sell stocks in order to support your lifestyle later on, there's tax consequences that come with that.